All right, welcome into Market Day Report. Hope you had a great weekend. Nothing really happened over the weekend. It was kind of a boring one, right? Oh, boy, oh, boy. Let's talk about these markets, though, and see what we had going on overnight. That's probably the best way to kick things off. And I'll start there with corn. I'll bring up a corn board, and it will show us a lower board. September's down 6 1/4 cents to 3.95 3/4. A penny and 3/4 off the low of the overnight session. Look at these, 409, 408's the low, a penny off the low. In an 8-cent range. So corn trading heavy once again here, folks. It's not going to be a fun day sitting in this chair. Let's take a look at soybeans. It gets worse here. 19 cents lower in August. 10.86 is last. Novi new crop, 19.5 cents lower there. 10.45 3/4. I mean, dare I say that $9 we could have a 9 in front of this? I mean, geez. The weather's been good though. How about wheat in Chicago? That too is bad. Double-digit losses lower there. 5.35.5 last in Sep. About 3 cents off the low. Going out to March, that's down 14 1/4 cents to 5.83 1/4. All right, that's 2.5 cents from the low there. That's Chicago wheat. Let's go to Kansas City. That too is off solid double digits, 15 3/4 cents lower. And that subcontract to 5.52, just 1 3/4 cents off the low of the day. March, well, that's 15.5 cents lower to 5.86.5, a penny and a half off the low there. That's Kansas City. Let's move over to spring wheat in Minneapolis. That's 10 1/4 cents lower in the front month Sep. 5.87 1/4 is last there, and that's about a penny and a half off the low of the day there. March is off 9 3/4 cents to 6.25 1/4. And then we get to cotton. I think cotton rallied if I was doing my radio show and remembered. Yeah, look at that. Well, Deese is the new crop. 115 points better in Deese to 72.42. All right. That's what we've got going on in the grains. Let's bring in our next guest analyst to help us open up the week. And he's the guy that does it for us seems like every day. Brian Hoops, Midwest Market Solutions. Brian, thanks for being on. All right. I don't know, where do you get started? I mean, I did the radio show, and there was not a lot of happy, smiling faces on that earlier today. And we could have a 3 in front of corn and a 9 in front of beans. That's no bueno.
Yeah, and a 4 in front of wheat. It's not going to be fun, I'm afraid. You look at you talked about weather being very, very favorable. You look at the 10-day outlook. There's a couple days of heat, and then cooler temperatures, plenty of rainfall. Just doesn't look like anything to really spur funds to come out of these short positions and push the markets higher. No adverse weather. Exports aren't going to do it. The supply and demand report didn't give us anything that was bullish to hang our hat on to say that the trend has changed in any of these markets. Just not much out there as far as a positive news to push us higher. So we're seeing a big jump in the stock market this morning. And I think if you put some of that on the fact that our future President Trump, survived that assassination attack on Saturday, and we're getting a stock market rally anticipating he's going to be president, I think you also have to say maybe we're getting some anticipation that he's going to be president. It's weighing on our grains as well, as will reestablish tariffs against China, and that could hurt our demand from them. But quite honestly, we're not getting much demand out of China right now. They've bought 1 cargo of soybeans for the new crop category. That's way pales in comparison to what they've done previously. They're not buying much corn, and frankly, they're not buying wheat either. So there isn't much trade to be impacted with China right now. Our demand is really slow.
I mean, I guess that's the silver lining in that whole idea. I mean, and there obviously is some tensions. I think there's obviously something political going on there right now anyway, but you're right. And would I be fair to say this, though? I mean, I was pretty clued into it the last time around when he put those tariffs on. It was volatile, very volatile for the farmer, but in the end, the cash checks made up for it, and things were okay. I'm not going to say it was a great years, but in the end, it was okay. But boy, there was some volatility between getting started and getting finished, right? Is that about right?
That's exactly right. Yeah, in the end, the long game, it's going to be beneficial for the U.S. economy, the U.S. farmer. In the short run, it hurts a little bit. There's a little bit of volatilities. There's that transition period until those checks start to arrive, where prices are down, doom and gloom type situation. But I think in the end, longer term, it certainly works out to the benefit of the American farmer to have China involved in buying U.S. products, because you can see what's doing to our prices right now. They're not involved at all buying U.S. products whatsoever.
Got about 20, 30 seconds left. Events over the weekend you've already alluded to make that WASDE report seem like it was about 7 weeks ago already. I don't know why, but it feels like that.
Right.
Nothing bullish in there for anybody here that we can't get anything started?
Certainly not in the wheat. The stocks to use ratio wheat is near 50% to stocks to use ratio. That's a huge amount. Compare that to corn, that's around 14%, and that's considered to be fairly large. The USDA and compared to estimates, the corn, maybe there was a little bit of friendliness there, but ending stocks are still 2.1 billion bushels and probably going to grow if we see a larger crop than what the USDA is saying right now.
Yeah, and I had guys on the radio show saying they're looking at 183, 184. That's the whisper numbers out in the fields right now. I mean, are you hearing that too?
Yeah, you talk about 1% increase on these yields. You're talking a 1 bushel per acre increase over 181. That puts you almost to 183. So absolutely, I think that's very, very possible. Same thing for soybeans. You could see potential yield increases in the next supply and demand report from the USDA. They're not going down. It looks like the yields are actually going to be increased.
All right, we'll have to wait and see. All right, stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more. Brian Hoops, Midwest Market Solutions. We'll be right back after this. All right, welcome back. Let's remind ourselves what we had happen in the old livestock market before we went away for the weekend, right? Let's take a look and see what we've got going on in live cattle. This is what happened on Friday. We were just a little bit better up front. August was up 12 cents to 182.37. But the gains were in the backs. The deferreds, April was up $1.02 to 189.87 there. So there you go. That's live cattle. Moving over to the feeders, what do they got in store for us? Well, that was the opposite. The leader in feeders was up front. August was up $2.50 to 258.65. And as you go out the deferreds, or out the curve, as some folks say, January, way out in January, we were up $1.10 to 254.72. All right, that's what's happening with the feeder cattle. And finally, let's take a look at lean hogs. Well, lean hogs were mixed. Fronts were a little bit better, backs a little bit worse, but you know what? Nothing too crazy. We had August up $1.77 to 88.45, and then everything kind of tailed off from there. If you go all the way out to the Feb, that was down 35 cents to 67.50, but it's really mainly a front month contract, up $1.77 to 88.45 in August. All right, let's bring him back in. That's Brian Hoops, Midwest Market Solutions. Brian, what's it look like here today? What are your thoughts? What's the machine got for us?
Yeah, a lot of the news that we've been talking about, the cattle market is starting to happen. Lower cash trade last week, softer cutout values, packer margins going in the red. We had a marking year low in exports last week, so demand starting to soften. But yet the futures held in there fairly well last week and showed some gains on Friday. Probably going to try and extend those gains this morning. Looks like a mixed opening by the machines, but probably going to, I think, try and extend to the upside a little bit. By Friday, we're going to be talking cattle on feed report, and that looks to be friendly. So, we're going to absorb some negative news we did last week, going to absorb some early this week. And if we can kind of come out of this holding our own, by Friday, news should be getting a little more positive because those placement numbers should be close to 10% less than they were a year ago. So that looks to bode well and keep our cattle market pretty well on solid footing.
All right, well, it'll be interesting to see how this all shakes out. I think we got, in the next 4 weeks for everything combined, give us a good or better picture about where we stand. Because just real quick, Brian, I can't remember. It's been a long time since we haven't had a weather scare in a growing season. I mean, I know it was a little wet trying to get in, but man, time's running out. Real quick, 10 seconds to you.
Oh, yeah, you're absolutely right. We're getting through forecasts through the end of July do not look threatening. So now you're looking at maybe August, early September, soybean pod fill. That's really your next weather threat that could push give us a lift in the markets. All
right, those guys better be ready when that happens. They got to shoot that out of the sky. All right, thanks for being on. Brian Hoops with Midwest Market Solutions on a Monday morning here, the 15th of July all day.